Kia ora, good morning. I'm still in the mic stand and roll. It's Monday the 21st of October and this is Kiwibank's Markets in a Minute. Well, whilst the AB's got the job done over the weekend, unfortunately for Boris Johnson and his fellow Brexit supporters, there's still a bit of work to do. Yes, the Irish are out of the World Cup, but Northern Ireland is still part of the EU. Well, for a few days more at least. Saturday's scheduled UK Parliament vote on last week's refreshed EU-UK deal was effectively cut off at the pass by the introduction of further legislation that essentially required the UK Prime Minister to formally request a Brexit extension out to the 31st of January before any debate and final vote could take place on the new agreement, allowing ministers some breathing space to fully analyse the new deal details. With gritted teeth and determination to still leave the EU by the end of this month, Johnson formally sent the extension request on Sunday to the EU, with EU leaders expected to take a couple of days to consider the details. Encountering his most recent blindside, Johnson now plans to try and still table his EU withdrawal agreement this week to try and understand if the UK Parliament would in principle still back it, and thus making the argument for a deadline extension a bit of a pointless exercise. So yes, the saga continues to go on. In other news, and perhaps more positive news for markets starting out the week, Chinese Vice President Premier Liu commented after Friday's close that substantial progress has been made in the foundation of a Phase 1 US-China trade deal, which now sees hope build that the initial deal could well be in fact signed at the upcoming APEC meeting in early November. In markets, US-European equity markets closed out Friday mostly lower, driven by mixed earnings data and a weaker than expected Chinese GDP release. In currencies, with Super Saturday turning into a bit of a damp squid really, the pound has opened circa about 0.5% lower versus the US dollar in early trading this morning, as markets priced the fact that no deal was actually struck over the weekend. For the Kiwi, having touched a 1 month high of 63.90 on the back of continued US dollar weakness on Friday, that upside may well continue to be tested following the Chinese trade comments. Righto, that's probably it for me. I've been reliably informed that a new face is set to join us tomorrow as the mic stand-in, so look out for that one. Have a good weekend ahead, and ka kite anō.